Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Shikhar Garg. Now, we have had an interesting set of updates, just looking to follow the Indian markets with a narrow day of the currency pairs movement. Now, it has been quite widely discussed the incursion of India in the global bond indices, and it is heard from quite credible sources that JP Morgan bond index is quite close in doing so. So we can say it's an update worthy of billions of flows over the months for the Indian markets. Further, it was also seen Russia was releasing the warnings privately among the nations that the economic distress is quite high, and there can be prolonged economic damage of the geopolitical sanctions and the geopolitical war that they are into with the US and the Europe and rest of the nation. So, JK, I'd like your thoughts on these fronts, as in what can we expect out of this bond incursion, as well as the updates on the geopolitical tensions going on.
Yes, Shikhar, good morning. To start with the bond inclusion news, it's definitely come from a credible source, and very likely that we are only a matter of time, not if, it's only when. Uh, so uh, I think I'm sure at some point market is going to start discounting those flows. The flows actually are expected to start next year probably. In fact, one of the notes from the government says in the borrowing program this year they have not factored in the bond flows that are likely due to this. Uh, it's like it's only a matter of time before we start getting those flows, and rupee starts getting support from that. Possibly below 80, sorry, above 80 for the dollar rupee becomes heavier after this decision comes about. Of course, in the absence of US markets, most participants have been focused on going on in Europe. Markets, of course, started with the risk of sentiment, particularly in Europe. They closed in green on Friday before Russia announced the gas supply stoppage, but they had to catch up yesterday, and all the markets were down in Europe. Economic news-wise, Eurozone retail sales rose in July compared to June, but was below expectations. On the composite PMI index, it was at an 18-month low. That includes the services and the manufacturing activity. It is came out at 48.9, so another month of contraction territory for the activity level in Europe. The relief from gas prices was obviously short-lived after Russia's decision to stop Nord Stream pipeline supply. The energy prices, rather than natural gas prices, which had slumped last week, again, had a big rise yesterday, rising about 30.4% on the, Russian, on the Dutch gas. European energy ministers are reportedly going to meet on September 9th to discuss options to rein in the soaring energy prices, including gas price caps and emergency credit lines for the energy market participants. So there's a lot of things happening in Europe. Uh, they have, of course, saved the euro from deeper slump yesterday, possibly by announcing these meeting to come up on September 9th, as well as the expectation of a hefty rate hike on Thursday by the ECB. Moving to the other side on Europe, UK PMI services also came below 50 for the first time after several quarters, several months, and it read 49.6, which it's not a surprise because we have been hearing lots of reports about the economy really struggling. But of more interest was the UK Prime Minister's election. Liz Truss became the new UK PM, winning over her opponent with a comfortable margin. While this is a sigh of relief from political uncertainty, the job facing the PM is enormous, with the economy facing a long recession and eye-watering inflation. Alleviating that while not exacerbating the other will be the first job for the incoming prime minister. Basically, you need to handle inflation at the same time, see that economic activity is not further impacted due to higher interest rates. There's a huge amount of pessimism around the UK at the moment, as evidenced by the pound, which almost hit the post-pandemic low of 1.1405. We have seen some bounce. That's probably a profit taking, but nothing indicates that there is a change of course for the pound, and it's likely to keep losing in the days to come. Break of 1.14 will of course lead to probably 1.10 psychological level. Much of interest will be on what Liz Truss says in her opening speech, which is expected on Tuesday afternoon, and a fiscal statement or an emergency budget is also expected later this month. So let's see how the UK markets affect. As I said, in the absence of US, a lot of things are happening in the other and areas, and market was focused on that. The one which caught eye yesterday was China, where they cut the reserve requirement ratio from 8 to 6% effective 15 September. And possibly this is a move designed to arrest a further slump in the yuan rate. But I doubt if this is going to change the weakening trend of the yuan, because yuan weakness is coming from a strong dollar and expectation of more Federal Reserve hikes in the coming months, and less aggressive rate hike talk in the market at the end of the year might help yuan to strengthen slightly. That depends on what the Fed sees as the course for the inflation. As such, yuan is expected to correct maybe to 6.85, but then definitely the course is not changing it to go higher. And we did have OPEC meeting yesterday, which agreed on a small production cut to bolster prices that have slid down fears of economic slowdown. And this will be a cut which will be effective from October, just 100,000 barrels per day. And of course, they have agreed to meet as frequently as possible to adjust productions, based on the evolving conditions. So we didn't have too much of an impact on oil prices. Brent and WTI did inch up about 3 to 4%, but they've since almost fallen back to the levels where they were yesterday. We kickstart the central bank rate decisions of this week with Australian Central Bank announcing the rate decision at 10 a.m. Our time. Bank is likely to hike rate by 0.5%, which is the fourth straight meeting of 0.5% cut. Say global, joining the other global central bank policymakers to strive and slam brakes on the growth and inflation. So again, last time they hiked, since then Australian dollar has fallen from almost 7.1 to 6.750. So we already seen a fall. It's possible that we see some short covering after this. But again, we need to see the growth trajectory and what happens in China, because China has reportedly shut down more regions due to zero COVID policy. Coming to our own rupee, we did have a marginal reaction on the weaker side for the rupee. Following the dollar index, we did see above 679.90, but it has become a bit heavier around those levels because market anticipates RBI to come in and sell. Interestingly, RBI governor made a slightly different comment on the rupee yesterday, where he said that RBI's interventions in foreign exchange markets are not just aimed at preventing excessive volatility, but also to anchor expectations around the depreciation of the domestic currency. So it's basically, it's a speculative activity where people have a self-fulfilling context of, buying in anticipation of more weakness, and that feeds into more weakness as demand emerges at higher levels. That is the kind of scenario they want to avoid. So long as the rupee is weakening based on, this is how I understand that, so long as the rupee becomes based on genuine demand, and the demand is too much that their supply is not enough. I mean, their moderate supply will keep coming, but it can exceed based on the global market conditions. So they have actually put their views in right perspective, and that's probably a hint to market not to go on a speculative mode as far as the rupee is concerned. That is how I am reading it. That's about the rupee. So we should expect rupee to continue in a narrow range. If we do have more positive news on the bond inclusion, etc., there can be selling pressure, and dollar index obviously will decide where the rupee goes from here on. Actually, oil being quite sober in the currently, so that's not a big factor as of now. Thank you.
Okay, JK, and yes, it was quite an interesting statement by our central government governor, where he mentioned that the interventions are to reflect the fundamentals rather than an overshoot in the exchange rate. So, interesting set of interventions with a quite different of an objective, as generally heard of by the market participants. What we also have with the last day as well as today morning is the symbolic rate cut by the symbolic supply cut by the OPEC, but it seems it does not have much of an impact, while China was seen cutting its reserve ratio to arrest the yuan weakness, whereas it still was seen fixing one of the weaker yuan levels this morning. And it another round of update was the fact that UK Prime Minister was elected, and Liz Truss was the winner of the election. Now, possibly we can see some bit of political stability in this economically unstable scenarios. Let's see how things go about. That's it for today, folks. We'll be coming back again with another round of updates for you, freshly brewed tomorrow morning. Thank you so much for listening.